Guys, welcome back. We're back with another video, and in today's video we're going to talk about how your stop losses get hit and how you can trade in line with banks. If you're new here, don't forget to hit that subscribe button to not miss out on any new video that we drop. Also turn on the notification bell icon so you can be the first to be notified when we drop any video. Hi guys, welcome back. We're back with another video, and in today's video we're going to talk about how you can actually avoid traps in the market. We know that there is no 100% in the market. You are going to get losers here and there, but if you can trade this way, you'll be able to be in line with the market maker cycle. In other words, just be in line with the big guys, right? So this pattern is very simple. We call this the market maker cycle. If you do not have any knowledge on this, you can watch some videos on the channel that explain more about this market maker cycle. So this is the simple cycle that we're going to focus on, right? But what I want to show you, as you can see on this example here, I've got, this demarcation here for Tuesday and Wednesday. As you know, there are variations to the theme, right? So what we're going to talk about is a pattern that happens, in a lot of pairs, if you can look for it daily. But basically what's happening here, the market maker responsible for the Asian session, right, usually gives us a consolidation, right? And we want this consolidation to be at least 50 pips, right? It can go over that sometimes, but we're looking for something with, 50 pips or less, right? This range has to be 50 pips or less, right? So what's basically happening here, as you can see, right, for retail traders, right, or rather support and resistant traders, right, they see this, right, and support and resistant traders trade ranges, right? They trade ranges. There's people buying, there's people selling with their stops above this area, and then there's people buying with their stops just below this area. Some people with even wider stops, right, down to these areas here. Right, so what will basically happen after the Asian session, as we get into the London session, right, we usually have traps, right? In this case, what will usually happen is the dealer might push the market to hit these stops, right? So he clears out all those stops, right? They're cleared, right? And then he gives you false moves to the downside, right? False moves to the downside. You get those aggressive moves, right? And that is when people get involved in the market. You get people, selling aggressively. You get these stop losses here being hit, all right? You get these stop losses here below this area being hit, and then the market will reverse and then continue with the market maker cycle. Right? So basically, the pattern that you want to see, if you have your structure, right, remember your market structure is always important, right? You want to see something like this, right? You want to see a range, right? And you want to see a false move, right? And then you want to see the market continue going up, right? So this is the manipulation, which is always, right, we can always find this, right? We're definitely going to look at some charts after this, right? But do you see what's happening here, right? These stop losses are hit, right? So what will happen here is the market will then turn, right? And for those people who trade BTMM, this can be your 800 EMA or your 200 EMA. Can also be your 50 EMA, right? What's basically happening here for my SMC traders, this is just an order block, right? It's an order block that's pushing price. But do you see that all this that happened here trapped people, right? Stop losses were hit, and then the market would then continue, right, in that direction. And that is the market maker cycle, where we get a peak, level 1, level 2, level 3, and another peak. All right. So remember I said this can be, variations, right? So the market can be coming off a demand area, right? On a Tuesday, the market goes up, right? The people are buying, right? There's people just buying all over. There's people buying right here, right? SNR traders, right? They see support and they're going heavy there. And guess what? They get their stop losses hit, right? They get their stop losses hit, and the people who are buying there probably had their stops below this area all those stop losses are getting hit too. And then finally it clears out at an order block and then continues going in the right direction, right? So it's not just about knowing that the market is in an uptrend or up phase. The timing is very important also. All right, the timing is very important. So let us look at some charts. We're going to use the 15 minutes time frame to just look at the traps. All right, to just look at the traps. So as you can see, we had a peak formation. All right, this is our peak formation. If we go to the 1 hour time frame, you can see this was a peak. All right, and we can also see that this was a nice supply area. All right, so price pushed up to that area, giving us a peak formation. Right, so we have a peak formation. Remember, we spoke about the peak formation. All right, so we have the peak formation. What do we expect? We expect level 1, level 2, level 3. Remember, this is the cycle we're talking about. If it's an up phase, we want to see this. If it's a down phase, we'd want to see this. All right, to the downside. That's the cycle. Okay, so looking at it from the 15 minutes time frame, we had the peak formation, as you can see. After having the peak formation, look at what happens, right? We've got small moves within that, right? We've got 1, 2, 3, and then the market bounces off an EMA, right? And then look at that. We had our Asian range. Remember, we spoke about the Asian range and stops being hit, and then we continue going down, right? We've got our Asian range, 49 pips. So we're looking for 50, but that's not bad. And look at what happens here. The money was grabbed this side, and the money was also grabbed on those people who were up here. But for, you know, my SMC traders, this was just an order block, right? That was just an order block, right? So if we can look at this from a clean chart, let me just highlight this, maybe from the H1, right? So if we're looking at this, this is what happened. I think this is the same point. Yeah, that was the same point. All right, so very simple. Look at what happened here. No need to complicate it. All right, price is coming off a supply area, as you can see, right? And then structure, right? We've got these areas down here. Look at that, right? We had the peak formation at the supply area. Right, price pushes down, price gets up, goes up again, right, after breaking structure, right? So if we look at that from, you know, with the EMAs on, this is what we had, right? We had that peak formation there, and then 1 day of drop, right? 1 day of drop, and then you can see the trap there. So if we get to our M15 time frame, this is what we had, right? The money was grabbed this side, and then an order block above, right? There's an order block above, and one more thing, right? After this, you know, when we're looking at this pattern, right, the range that we expect the dealers to manipulate, the range must also be 50 pips. Sometimes it goes above it, yes. There's no 100% in the market. Must be 50 pips, right, because of the ADR, right, the average daily range. Okay, right, so we're looking for these type of, you know, reactions around that region, above that area, in line with the cycle. Okay, so this is what we have. We've got a trap above, right? And then we had a peak, right? Our confirmation. We had our CDI confirmation right there. All right. Then we had 1 day of drop. Then look at what happens, right? This is the high of the day. The dealer pulls it off down here, low of the day. Then that ends the day into a consolidation, right? Now look at this Asian range on this next day. This was on a Friday, right? We had this range. Right, people were trading, right, and then look at that. After all that, stops were hit, right? Look at the false moves, right? Look at the aggressive moves, right? A lot of people got involved right here, right? A lot of people got involved, and guess what? Market just went back to a hidden base area. But look at this. The range above that was within the 40 pip range. Remember, we're looking at a 50 pip range, 40 pip range, right? We had our CDI confirmation also, and then the market dropped, right? The market dropped, and then we had this happening during Asian session. We can see that this was over 80 pips now, guys. 80 pips. All right, so remember, we're looking for something, you know, at least around the 50 with a good pattern, right? So that's one thing. You don't have to trade the same pair every day, all right? Just look for clean setups, right? Just look for clean setups. So look at, that's what happened. We've got that level 1. So consolidation level 2, and then we had the last level there, right? So we can look at different pairs. Let's actually look at some recent moves, maybe this week. I mean, that's a clean trap, as you can see right there. That's very interesting. For next week, we're looking for pairs that were actually moving, trending pairs. Okay, a lot of pairs gave us peaks, eh? These are nice H1 peaks. Interesting. I should check those out. Okay. I'm looking for something recent. And how you can take advantage of knowing about this. And as I said, it's not an you don't have to trade the same pair, right? If it doesn't meet your requirements or your criteria rather for you to take a trade on your checklist, then don't take the trade. All right. So look at it. I remember end the day into a consolidation. Our Asian range, 50 pips. Remember, in this case is 34, and then look at that. All right. Trap above. Remember what we said. Above it, we're looking for a trap within that 50 pip range. In this case, this was huge. And then look at that. Look at where price went back to. Confluence now. This was actually a nice supply level. And then we had our peak and CDI confluence also. All right. So, these are trades that you can take, intraday trades. Right, then look at what happened here. In this case, we had a range, but the dealer didn't really trap above. Didn't really trap right there, because I mean, if you can see, you can see how he trapped here, right? This is our reversal area, so I was expecting a move above that, but look at that. That was not presented that day. Then look at what happens today, guys. Look at what actually happened today. Look at our range. Remember, 50 pip range. He just went above it just a bit, remember your ADR, guys. Just went above it just a bit. And then look at that trap. Where did he went? I'll go back to trap, your supply area, and then you get a nice opportunity to actually go short. Right? So it's not just about knowing that okay, this is the direction, but the timing also is very important, right? The timing is very, very important. Hi guys, take advantage of our annual package deal and purchase our pre-recorded course plus our 1-year VIP Signal membership for only $150. This course will basically give you our complete simplified MMK BTMN strategy, and we'll look more into smart money concepts and our advanced supply and demand. If you want to take part of this or take advantage of this, you can get in touch with us through Telegram. Find the link in the description below. Hi guys, welcome back. So let's look through more examples about not trading until the stops are hit. Right, so look at what we had here. We had this area. This is a nice demand area, as you can see, or an order block rather. And as price pushed up, we had this break of structure. Right, remember what I spoke about the pattern. We've got the consolidation. Look at what happens, right? The stops above get hit. All right, we've got a false move and very aggressive move, by the way. Look at how aggressive these moves are. Trap moves, right? 1, 2, 3, hit the stops, and then look at these burst down, right? 1, 2, 3, right? You can see that 1, 2, 3 until that area, and also these stops which were down here were actually, and you can also see this area, right? There's liquidity. You've got lows there, right? The dealer gets into that area, stops are hit, and then they pull it away from you. Right, so if you sold somewhere there or sold whatever you did there, you lost money, right? Or you're in margin trouble, you sold there, and now you're moving your stop loss, thinking it's gonna come back down, right? So same thing happens the next day, right? You get the range, right? And then the stops below will get hit. Look at that. Stops are hit, right? Stops are hit. Right, so you just have to be selective, right, and know the right trades to take, guys, in line with the cycle, right? Because these trades will present. Look at that. Stops got hit. Stops got hit. Right? But, retail traders saw a lot of things here. They probably saw resistance there. So, selling, I've done this before myself. Yeah. Right? Selling. You've got your stop loss just above. And guess what? They grab it. And then they move in your direction. Right? Right? And these happen on the bigger picture also. These happen. Look at that. Just a money grabber. Grab the money, pull it away from you. Right? Grab the money, pull it away from them. Right? But you have to be selective. Look at this one. Grab, pull it away from them. Right? So if you can actually catch these type of trades, you've got the opportunity to catch, price really moving, right? Like when price trends, right? When price has, aggressive moves. When these news, moves happen, they're in line with the cycle, right? We're trading with the cycle. We still have our structure. We still look at our TDI. We still look at, at a clean chart for more confluence, right? But understanding these traps and the timing is very important. All right, guys. So, guys, I hope you learned something from this video. If you are new here, don't forget to hit that subscribe button. Also, join our Telegram channel. Find the link in the description below.